Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, June 18th, 2021. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Here's a look at the daily time frame of the ES. One thing to keep in mind is we do have quadruple witching here today, options expirations for all the various instruments. That could provide a bit of volatility back and forth. For the moment, you'll notice here, if I zoom in, obviously we've been in an overall uptrend, but ever since the FOMC key level has come out here, price has taken it offered and has continued to hold below that level throughout, which is indicative of further weakness until significant rejection can be found. At the moment, on an intraday basis, keep an eye on the previous session's low right now. Price has pushed back above that level and now has a shot to retest it from above, defend that level, and perhaps bounce this thing back toward 4,200 from a very short-term perspective. So keep an eye on 4183 here from an intraday perspective. Now, if there's a failure here to really stay above that previous low, that's where you could see even more weakness up ahead. You'll notice right here the FOMC key level below. That's the April 28th level. Ever since this transition day, prior to that it was resistance. That transition day it became support here and here. You see it hit here. If there's any failure to hold that low or that FOMC key level, it opens up a path to the next key level below, and that's the previous month's low price. That's about 41.35 here. So that's going to be the next major level down below to test. It appears to be 41.33s. If there's a failure to hold this zone right here where we are today, 41.80, 41.76 half, that opens up quite a bit more weakness over the next near term. Now keep in mind, anytime you do see that initial move away from that FOMC key level, whenever there is a strong sign of rejection at the lower edge of the range, you tend to see a bounce back precisely to that level. So over here, for example, once we got a big move away, that rejection snapped it right back to that level. That is typically what can happen. So that'll be what we'll be looking for here down the road. All right, taking a look here at the NQ. You'll notice the NQ here, very clear uptrending market, very bullish on every pullback at or below the 8-period average. A solid trend day up yesterday, and we're starting to see a bit of a fade after trend day. We saw a higher high failure here at the previous highs. We're now walking it back toward the previous session's midpoint. Previous session's midpoint here is 14.020. 14.014 is the FOMC key level from Wednesday's market. That's the zone to watch right now, right? 14K, 14.020. If price can hold that, we can tend to push a little bit higher. If there's any failure to hold that mid today, that opens up quite a bit more weakness, and you start hunting toward the previous session's low and perhaps even below that. So right now, big time zone right here between 14K and 14.020. All right, let's take a look now at crude oil. Right now, crude oil down about 0.6%, but this pullback could provide the next bounce. We talked about the last couple of days, if price were to push below 70, anything below 70 could be an opportunity to buy it for a return back to 72.35, and then a continuation towards 76.72, that upper target. We did get a pushback yesterday. That first test below it was a great trap from an intraday perspective. Again today, you're seeing very similar price action here. 3-point reversal off the lows. A nice little bounce back that we're seeing so far of prices below 70. Perhaps not a strong rejection just yet, but whenever this pullback is done, maybe it needs Monday's action to kind of wipe it out. It could provide a very good buying opportunity for the next continuation up. If, for example, this turns into a broader pullback, a bigger, more significant pullback, then we may see a bounce back toward the midpoint and develop a new key range at those highs. So just keep that in mind. Right now we have pushed through that 66-67 zone, which suggests that we are in new market structure up above, we could theoretically drop all the way back to the top of that zone and then look to become a range above that area. So some longer term thoughts, but right now short term, keep an eye on 70. Lastly, taking a look at gold futures. What a significant sell-off we saw in gold over the previous couple of days. One thing, coming into today's session, we were looking for a bounce back toward 1800 as a fade after trend day. It did that very, very nicely here in overnight and pre-market trading. It has since sold back off away from that midpoint, which is indicative of more weakness to come. The other thing you'll notice here is we did not hit the previous month's low price. After taking out the previous month's mid, I mentioned before that it opens up a continuation toward the previous month's low. We're basically sitting just above that level. Again, that 1800 very important, previous session's midpoint very important. Staying below that zone suggests more downside ahead, and overall we're very close to that previous low, but we will likely drive through that previous low in order to find some sort of rejection and perhaps a bounce back up. If there's no rejection, this thing could continue to extend downward. So right now, key level here, it's a big time market structure level. The idea was to watch 1760 for a sign of rejection. So right now trading 1777.5, looking for a push through the previous month's low and into 1760 for a shot at rejection. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, happy Friday. Please be sure to like, share, and subscribe, and have a fantastic weekend. See you in the trading room.